Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq 100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Tuesday afternoon, we have Frederick, Managing Director of Trading Derivatives at the Schwab Center for Financial Research. And we're going to take a look at how traders are positioned into the all-important FOMC announcement taking place tomorrow, Wednesday at 2 o'clock. And of course, we have the Jay Powell press conference after. And Randy, it feels as if it's finally here. We've been talking about this for well over 3 to 4 weeks now. How do you think traders are positioned into this announcement? Because this conversation could be very different at this time tomorrow.
You're right. I mean, it's just like every day we live from day to day on what the Fed says and what the Fed doesn't say and what it might or might not do. What we do know is this: we've had a quarter point, a half point, 2 3/4 points, and we're almost certainly going to get another 3/4 point hike tomorrow. Odds are 100% of that. Now, since Jay Powell's comments, since the FedEx announcement, a few other things, the possibility of a potential 1% hike, and certainly since the last CPI report, has crept into the lexicon, if you will. But honestly, the probability of that has dropped now just below 20%. I've studied these, the Fed funds futures for the last 8 years that they've existed and compared them against what's happened with the Fed. So far, the only time the Fed has ever moved up or down in interest rates was when the probability from the futures market was greater than 60%. The fact that it's only 20% now for a 1% hike, I would say there's a high certainty that we're probably going to get a 75 basis point hike. Now, here's the fascinating thing. We've had 4 rate hikes this year. The market rallied on all 4 of those days. So if we get 75, I think we're probably going to see a rally again. Now, if the Fed surprises and really comes down hard with the hammer and puts out 100, not only will that shock everything, I think the markets are probably going to sell off if that happens. So that'll tell us that the Fed thinks inflation is really a problem.
So, Randy, what's next, right? After we go through the press conference and analysts have time to parse through all of the language, where does the focus turn to? Is it still going to remain on rates and inflation? I mean, we finally have earnings, so we can get some corporate data out in October, but it just seems the market is laser focused on what's happening with rates, and it's being impatient, in my opinion, for that, because the policy is not going to play out overnight.
Yeah, so we are between earnings season, as you said. We've probably got about 4 weeks at least until we get past the end of the actual calendar quarter and we start getting some reports for the next quarter. So there's a big vacuum there. And when that happens, of course, you've got all kinds of geopolitical or even domestic political or Fed type of news that's going to rattle the markets. That's common. And that plays into the historical seasonal narrative that September is a rough month, and the only month that's not quite as bad is October. September being the worst, October being second worst. So it sort of plays into what I've been of the mindset of for quite a while, that things are going to be rocky. They're going to be volatile. It's my belief if we get a 3/4 rate hike, which I think we will, and that's the same as we got the last 2 times, it basically means that the Fed doesn't see any real progress in bringing inflation down yet. But we're going to have a couple of reports. We're going to have some labor reports, several inflation reports, CPIs, PPIs, PCEs, all those things before the next rate hike, which is on November 2. My belief is we're going to see continued volatility until we get to that point. If we see some progress in that data by the time we get to November, if we could bring that rate hike down to a half, and right now the odds on favorite is at a half. It's about 100. It's about a 100% probability of that. There's only about a 75% chance of another 3/4 rate hike then. And of course, there's a lot of time for that to move. I think we're going to just see nothing but sideways, choppy, more volatile markets than we've seen right now. But here's another interesting point here. If you look at something like the VOLQ, right, which measures the Nasdaq volatility, look at the range for the year. It's been just below 20. It's been above 40. Right now, it's smack in the middle. Think about that. The markets are down sharply year to date. We're still not into a new bull market yet. And yet volatility, for the most part, is right at its average for the year. There's no panic out there. There's anxiety. There's a lot of complaining about inflation. There's uncertainty, but there has been no panic just yet. I'm not sure we're going to get it, but I'm also not sure we're going to have a whole lot of progress until we get to November. And you know what else happens right around that same time? Midterm elections. So we've had a sell the rumor. And I think when we get to the early part of November and get past that Fed rate hike and the elections, then it might be a buy the news type of an environment. But until then, buckle up and hold on.
All right, Randy, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.